Okay, welcome back to my second video on Sofi. So what I'm showing right now, right, let's start with the investor presentation slides, okay, that Sofi came up with back in 2021. Okay, this was when it first came from a spec to become a public listed company. So you can see this logo, and then what's its mission is to help, this HENWS, right? So it's highly educated, not rich yet, yeah, but then not wealthy yet or something like that. So it's to help people achieve their financial independence. Okay. Um, and they focus on getting your money right. Okay, that's their branding for many times. Um, yep. So that's what they do. I can share this link below if you want to read it. Okay, so they have this financial services productivity loop that they have been advocating for quite some time. That means that once you're in this loop, right, it's kind of like an Apple loop. Why once you get the iPhone, right, then you'll be more likely to get the Mac. Once you get the Mac and the iPhone, which syncs perfectly, then you may get the AirPods, and the Apple Watch and stuff. Which in my case, I found it to be quite a good ecosystem. So once you start, you get trapped in the ecosystem. Even if like Samsung comes up with a better watch, right, you may not get it because everything of yours is really synced to Apple. And there's just this inertia for you to change out of Apple product. So SoFi is doing the same in the financial space. So that's what they're trying to do. Okay. And then, okay, so they advocated that in this fintech space, right, there is still the opportunity that the winner takes the most. Okay, just like these other companies, where example Booking Expedia, right, they're the same company, right? If you want to book your flights, you're gonna go to either of this. And then for jobs, it's like LinkedIn. For shows, it's Netflix. They have a moat which cannot be easily taken over by someone else. Okay, and then yeah, so back then they found out that that 50% of Americans use more than one bank for their financial services. Okay, that can go for investment, loans, checking and savings, stuff like that. So what they're trying to do is to be the one-stop shop, so you don't have to deal with so many banks and just deal with SoFi alone. Okay, and then they got reasons why you use multiple banks. Okay, for spread out, lower fees, different products that need. Okay, so that time they advocated they're the only company providing all of this solution in one app. Okay. So they have the money, which is your checking savings. They have the credit card. Okay, they got invest platform. They got personal loans. They got student loans. And then they got SoFi at Work, which is your company. Okay. Yeah. So they this was all slides. So I think one or two of the management team may have left already. Okay. I need to check on that. But what really subscribes to me, right, is Anthony Lotto. So it's if you can go Google up about him quite a bit. Okay, so he was previously the COO of Twitter. Okay, and he's CEO of SoFi now. Or and then he was also at NFL and he was an analyst at Goldman Sachs. And he really knows what he's doing. So he's not one that uh, just uh, only cares about himself and then his own money. Of course, he will want that to get earn more money. But then he displays leadership. He's very active on Twitter, and he addresses the comments by staff and by customers all around. So he's really really good. And one difference about him and other CEOs, right, is that not at this time, but at the recent few months and years, okay, Anthony Lotto has been buying a lot of SoFi shares, which is which is really positive because he's putting his money at where his mouth is. So I mean, he's saying that SoFi will grow to a top 10 financial institution in USA, and he's putting the money in. So he's not just saying that and then he's selling shares at the same time, which contradicts it. He believes in the company, putting his own money in, and yeah, I think that is one very strong reason why you can look into Sofi. Okay, that it has a very good CEO. Um, yeah. So if you look at this timeline, which is very old already, okay, they introduced multiple products very quickly, one after the other, back in 2019 and 2020. Okay, and then all launched within 2 years. Okay, so at that point of time, okay, they had 1.7 million members. Okay, they expected 2021 to have 3 million. So later on, we will see, right, if they actually achieve their goals, which is one big thing because all these spec presentations like to talk big and then share that we'll grow like how big and stuff like and I will earn a lot of money, but then it may not deliver on that. So let's take a look later at the slides, right, to see whether they achieved it. Okay, and then the products. Okay, now that they're 2.2 million, and then they think that it'll be 4 million by 2021. And yep. Okay, this one nothing much. Okay. This other thing is the customer acquisition cost. So when a bank or product, right, I think you would know that you sign up a new credit card, they'll give you a credit card promo, spend $500, they give you $300 back, that kind of thing. That's the customer acquisition cost. That's the cost you put in thinking that this customer will spend more than that and help you earn back this amount. So for sorry about that. So for Sofi, they are trying to say that they can acquire customers at lower cost because of this cross-selling impact. But to be honest, so far I've seen this thing is still not very low. They can't be compared to new bank. But yeah, but then their products are really a lot of lending. So it's pretty. We have to see. We have to see about that. Okay, and they do home loans as well. Yep. So this one, if you want to see, you can look at it. Okay, there's nothing much I'll go through here. Okay, so this part is important, right? So we need to look at that top line and bottom line. So they don't have profits yet. So if you look at adjusted net revenue, right, okay, they are expecting about 1 billion in 2021. Okay, and let's look at 2023 because that's where we're in, right? They expect to make 2.1 billion. Okay, revenue, and then adjusted EBITDA. Okay, in right then I think they were still negative. Okay, but 2021 they're expecting a positive, and then you can see this almost a 10x. And then 2023 they're expecting $480 million in EBITDA. Okay. Okay, and in the original presentation slides, right, they really wanted to say already that their lending is the biggest component, okay, of their revenue in 2020, but in 2025 they're going to compose of three parts: financial services, okay, tech platform, as well as for lending, okay, to reach a 3.7 billion of adjusted net revenue. Okay, so one big thing they wanted to do was to get this uh bank charter. Okay, so if they can get a bank charter, then they can originate the loans from their own bank instead of borrowing from other banks, and this can allow them to save a lot on their fees that they pay to other banks, which in turn, right, increases their profit margins. Okay, so this bank charter is really really important. Other stocks that have this is like Lending Club. Okay, so in this kind of banks, right, they are able to dictate the interest rate that they want to give to customers. Yeah, that's it. Okay, before we move on to the next part I want to present, right, let's take a look at what SoFi aimed to get, right. They wanted to get $980 million, okay, of uh, revenue, just net revenue in 2021. They also wanted 27 million of EBITDA, as well as 3 million members. Okay, let's take a look at their Q1 2023 earnings call, okay, to see their results. So if you look at 2021, okay, at the end of it, they wanted to hit 3 million members and they were at 3.5 or 3.46 to be exact. Okay, right now we are, I think, way above 6 million already. Okay, we in the previous quarter earnings we were already at 5.65 million, which is quite a big growth. If you look at the year-over-year growth, right, it's coming down. Okay, but of course we cannot be growing at insane rates of 100% every year. But if you look at it, we are adding like 400,000 members a quarter. And Anthony Notos recently said in one of its fireside chat, right, that it's aiming for eventually in 2024, 2025, right, to be adding 800,000 customers per quarter. So that means this is likely going to increase even more. Okay. And then products. Okay, products, I can't remember what they wanted. Maybe 5 million or something. Not very. Yeah. Let's move on first. And then Galileo. Okay, so this one, right, is one of my major concern. Okay, because if you look at the numbers, right, so I'm not just telling you all the positive things only. If you look at numbers, Galileo has been slightly increasing every quarter, except this quarter. I mean, the last quarter, I mean. So last quarter, right, they actually lost a big customer. Okay, and then they had a drop of 5 million accounts. So this Galileo, it's not really performing as I hoped. Okay, they after this happened, right, they did some restructuring, they streamlined their staff and stuff. So we really have to see this quarter, how do they do? Because they said they want to go for big customers. I'm not sure if it's so easy to sign a new customer that's legacy bank. We'll have to see. We have to monitor about this. Okay. Okay, and these are the products. Okay. So these are still looking okay. Yeah. Okay. So let's look at revenue. Okay. So I realized that we don't see 2021, right? 2021. 2021. Yes, we have it here. Is it here? I didn't know this is still separated. Adjusted net revenue. 2021. Okay, so if you look at this, right, remember they promised in their spec slides, right, that they were aiming for 980 million. So they actually got 1.01 billion, which is a bit. Okay. And then adjusted net EBITDA, right? I think they were looking at for 27 million. Okay, and then they got 30 million. So why do I highlight this first, right? Is to show that they do deliver on the targets. Especially, when you first start out and for a spec, right, you're likely to overpromise, and then give all the unicorns and rainbows. But they actually delivered on their numbers. And not only that, right, you really, really have to understand that throughout COVID, right, Biden has been postponing and, the student loan moratorium nonstop. And that actually caused a huge loss in Sofi's business. If you look at student loan, right, if you go up one slide, right, look at this. We were originating 1 billion, okay, in Q1 2021, and Q4 was like 1.5 billion. Okay, and if you look at this has dropped off a cliff. Okay, at Q1, right, we only had 500 million left. That's actually decreasing. But if you look at our personal loan, right, it went up like crazy. Okay, and if you look at home loans, okay, because one of the partners that Sofi used to work with, right, left Sofi. So if you look at it, it was a downtrend as well. Okay, went all the way down to less than 100 million. Okay, but they recently acquired Winham Capital Mortgage. So that's going to bring up their home loans from now on. And they have sent out multiple advertisements for that. And student loan, we all know that it's going to stop, I think, on end of September. So 1st October onwards, interests are going to accrue and then people are going to start paying. So we really should look at student loans and home loans from now on. And if they really come back and they grow, right, we can expect Sofi to like just fly, because without student loan and home loans, they really doing so well. So with these two coming back, right, it'd be a very great tailwind for us to uh deliver top line, bottom line numbers that will give us profitability. Okay. So if we go back just now, okay. So for their Q1 results, okay, they guided for 430 to 440 million and they delivered on 460. So one thing of SoFi is they're always sandbagging their guidance. They give a lower one and then they always beat it, okay, which is good. But somehow in the recent quarters, right, the earnings report actually it hasn't been that good. I'll show you another Excel later of all the stock performance and stuff, which I'll explain why it's not good. But yeah, so they always over deliver. And for EBITDA, they guided for 40 to 45 million and then they delivered 76 million in the previous quarter. So next quarter, which is this one, they guided for 470 to 480. Okay, so knowing them, right, they're definitely going to beat on this. Okay, and then the adjusted EBITDA, they're looking at 50 to 60. I think they're going to beat as well because last quarter was really 76. I mean, this quarter, even if you drop a bit, it shouldn't be in 50 to 60. Okay. And then the 2023 guidance for the whole year, okay, they're guiding for about 2 billion in adjusted net revenue and 268 to 288 million in EBITDA. Okay, they also said that they are assuming positive GAAP net income in Q4. Okay, so knowing them, right, definitely we are going to achieve that probably in Q3. Okay, even this quarter, right, there might be a slight tiny chance we are almost profitable. Okay, so next let's go to what the analysts are expecting for SoFi's results. Okay, so now, right, we can see that, right, this is earnings whispers, right, we can see that consensus estimate, right, SoFi for this quarter is about, I seen different numbers, about 6 to 7 cents loss, okay, and the revenue of 478.78 million. You're reporting on Monday, and that's why I have to rush to do this video. I've never done like such videos before. I'm rushing to do it before the earnings to see how it goes. Okay, and earnings whisper is expecting about 4 cents loss instead. It's a huge beat. Okay. Something interesting, okay, that happened was that SoFi, someone actually dug out the SoFi FFIEC report back on last Friday when the market closed. Okay, they updated this. Okay, so you can see that they updated for the quarter up to 30th June and they updated last Friday. Okay, if we go all the way down, right, to page 18, right? Okay, before that, right, actually SoFi was guiding for about 2 billion in deposits. Okay, we can see that here, okay, they actually reported a 10.2 billion in deposits. Okay, if these numbers were true, that would mean a 3.2 billion increase. However, I've done quite a few research and that there's a big community about SoFi online. Okay, there's like especially data driven investing on Twitter. Okay, so if you look at this, most likely the numbers do not tally with SoFi itself because of this is for SoFi Bank, which is not SoFi itself. So this is guiding for 13.2. We are actually thinking of maybe about 12.5 to 13. So that would mean an increase of 250 to, 2.5 to 3 billion of deposits in one quarter, which is really phenomenal still. Okay, especially when other banks are like losing deposits non-stop. And then there's also a part about net interest revenue and non-interest revenue. I'm not sure where is it, so probably I'll not look too deep into it. Okay, it shows a good healthy increase in Q2. Not super crazy, but still good. But then again, like I said just now, right, these numbers do not actually relate to Sofi's numbers from Monday one to one. So we'll have to take a look at that again. Okay, I think this is the non-interest income, 201 million, compared to 100 and I think 74 million. No, 100 and something million. It was more than a 2x. Okay, it's not a 2x. It's a year-to-date number, so a good increase. And then the net interest income at 431 million. So we'll see how these numbers go. Okay, so let me show the Excel that I wanted to show you just now. Okay, so this tracks all of SoFi's numbers since I started investing in them. Okay, so I'm not just like investing in my company without doing my due diligence. I actually go in depth into the numbers. Okay, although I'm not trained to do so, what I'm doing may not be perfect, but yeah. So these numbers, you look at it, right? Okay, I'm monitoring their growth. That's what I'm doing. So if something goes bad like this, okay, I will be able to pick it up easily, and then it may change my perspective. Because right now I'm quite heavily invested in SoFi, so um I'll have to do my own due diligence and monitor as the stock announces earnings every quarter. So right now, okay, last quarter it was 5.65 million members, right? I'm expecting about 6.1 million this quarter. Okay, and then products to 9.2 million accounts, 9.2 million products. Okay, and lending products to grow well to 1.5 million products. Okay, but this two I'm not monitoring that much. Okay, I just want to see that they hit the targets and they're not decreasing. So for student loans, although the student loan is slated to end, but this happened in Q3, so Q2 we may not see the uptick yet. That's why I'm only guiding for a slightly increase, 600 million, okay, in student loan origination. And personal loan, I'm hoping that they keep it constant. Because something about student personal loans is if you're giving too much, it's also very risky. Because these are very profitable business, lending business. Because personal loans, the interest rates are highest, but the default rates are also the highest. So that's why this part is a balance. You cannot be growing too big, and then later on, when they default and then your company will go under. I'm hoping they stay about constant. Okay, and then home loans will pick up a bit because they'll get Wyndham capital already. So maybe it needs to ramp up and stuff. I'm not expecting too much. So with that, I'm looking at 3.7 billion origination. Okay, and with that, right, this one, I'll just put a number. Maybe I'm hoping for this is about 150 million more originations. Maybe this can give me 220. Maybe. Okay, we'll have to see. Okay. Yeah, it's not very relatable if you look at this. This grew by a lot, but then this didn't change. So it really depends on expenses. Yeah, I'm hoping for 220. It's a good increase. That will bring our increase quarterly to about 5%, which will be good. Okay. So technology platform, I really don't know how this will fare. To be honest, right, I just hope that they constant, no one leaves and stuff like that. Yeah, and then that will be good. I don't know about this. I hope they sign the big client. I don't think it'll be that soon. Okay, and then financial services. Oh, this is the interesting one. Financial services, right? If you look at it, right, it was increasing. Okay, in losses. Look at this, until 53.7 million dollars of loss here. Okay, but then since Q3 of 2022, this has been going down. I really hope that this and go to 10 million or less in losses for this. Okay, that will put us in a very good position for profitability next quarter. As long as it's break even, right? Because lending we are earning, okay, and then for technology we are earning. So if this earns, then definitely we'll become profitable. Okay. Okay, so let's come to this part. Okay, so this is the important part. How much revenue do we expect them to earn uh, this quarter? I'm putting it at $480 million, which is the top end of their guidance. Knowing them, right, I think they'll beat it. Maybe let me adjust it. Let me adjust it to 490,000. Yeah. I think they definitely will beat their guidance. So let's look at 490,000, which is very good, because if so, then we are definitely going to cross 500 million next quarter. Okay, which is towards our 2 billion target for the year. And then for adjusted EBITDA, okay, if you look at the increase, right, it's been quite a big increase. This one I'm expecting I'm quite ambitious about it. Okay, I'm hoping for 95 million. Maybe I'll drop it down to 90 million. The reason being, right, because if this is 530 and this is 550, right? Not too much. Okay. So if this is like this, okay, you look at the sum, right? We are looking at about it'll cross 2 billion. So this one we do our one of say, and then this one we do a 115. Okay, if so, then no, we are way above the 288 million guidance that they guided for. I think their EBITDA they soft. They guided a bit little. Yeah. Anyway, I'm hoping for 90 million at least. I'm not gonna reduce this. Yeah, that's what I'm hoping that they will get. Whether they get or not, no one knows. We'll know on Monday. Okay, and then if you go down, last but not least, this one, I think this one should be not so high. Maybe let's look at 50 million. Okay, which is still a phenomenal increase. Look at it. It's more than 4x from 1 year ago. That is going to allow them to be able to lend out so much more money and earn on that interest rate. Okay, so last but not least, okay, I think this title, right, I think I probably wrote, my stock portfolio review, that kind of thing. So for Sofi, currently I'm fully invested in it. It's the only stock I own. Okay, if you watch my previous video, right, which is quite bad quality, I think I used this mic that didn't really work well. But that one I had many different investments. I was looking at JD, I was looking at other stocks. But I had ETFs in them. And now looking at this, I'm so aggressive because I'm all into this stock. In fact, on Friday itself, okay, I threw another $12,000 in. This 12,000 I'm going to trade it. Okay, so I threw 12,000 in to Sofi, and I'm going to sell it before market open. Okay, why so, right? If you look at this trending, so this has all the look at this. Sofi has beat analyst estimates for revenue every single quarter and has beaten EPS every single quarter, or at least met it. Okay, but if you look at the stock performance, that's like shit. Okay, we beat by 10% and we are down 10%. We beat by 37% and we are down 10%. So there are so many. First thing, Okay, that I feel that there's so many shorts out there, hedge funds, shorting this company. Okay, our short interest has went up before the earnings, which is I don't like that. Okay, it went up from about average of 11 to 12 million, 12, 11, 12 million, 12, 11 to 12% of the float. Okay, the float, mind you, right, is it's 929,000. No, sorry, 40 million 900. So this is the float number of shares outstanding shares now. And a short interest of 15%, right, means that there is 141 million shares also shorted against this company, which has nothing but always produced better earnings than expected. So it's the market makers are against us. There's nothing much we can do. Okay, but eventually one day, I'm looking at a day where it turns profitable, and it starts to go like crazy. They will have to cover their shorts, and that's where they stock will rise. So this $12,000 that I put in on Friday, right? I'm trading it before pre-market open. Okay, I'm going to sell it just to make profits. Okay, because I have this 12,000 is for my emergency funds in my bank. So I'm just trading it, aiming to earn about 1 to 2,000 and then I'll withdraw. Okay. But as to my portfolio, right? Okay, let me open another spreadsheet.